here with Century 21 Harrelson Group in Myrtle Beach. Hope you're doing well. Hope you had a great Thanksgiving holiday week. Now that the week's over, I wanted to give you a quick update of how we finished the month of November and also what to expect in December and then going into 2020 with an election year coming up. I know there's a lot of questions out there. What's the real estate market going to be doing? Kind of give you my take based on data that I'm about to show you. Let me switch over and show you my screen real quick. So this is market stats. This is the software that we have access to that shows us the history and the stats about the entire market and what's happening. So right now, the one screen I'm looking at is closed sales. So this is the total number of transactions. This is all properties, single-family homes and condos combined. This is total number of sales that we've had in the month of November, going all the way back to 2003. This is every single month. So when we look at the month of November, right over here, we finished with 1,201 sales in the entire market. That's not just my company. We just sell a bunch of those, but that's the entire market. So 1,201 sales. That's an 8.7% increase over last year. So we go back and look at November of last year, you'll see it was 1,105. This year, 1,201. So pretty significant increase. Now this is a monthly increase. When we look at inventory, homes for sale, we see inventory drop 2.9% compared to November of 2018. Okay, so a little bit of a drop as well in inventory. So everything looks good. Everything looks strong. Being in the market right now, talking to a lot of buyers and sellers, everything is moving really well. Inventory is relatively low, so we are actually getting really good prices for sellers that are selling right now. In most communities, there are some communities right now where there is a good bit of inventory, so those communities are struggling a little bit. But for the most part, in general, when you look at the home market, inventory is low. But now, interest rates being as low as they are, it's also looking good for buyers because you're able to buy homes at this point that are higher priced than you would have a couple of years ago because of the interest rate being so low. So it's a really good market right now. It's kind of weird for both buyers and sellers, so it's working out really well. So now looking forward into next year. December has been pretty good so far. I think we're going to be flat and maybe a little bit up compared to last year for December. But let's kind of look into 2020, right? And this is kind of what I'm seeing on a micro level. Everything looks good, right? Sales were up, inventory was down for November. So if you just look at the micro level, things look really good. But let's kind of expand out a little bit and let's look at a bigger picture because a lot of times when you look at the bigger picture, you might be able to predict some sort of pattern going forward. So what I'm going to do, this is a monthly report. So what I'd like to do is go back to let's stay at homes for sale. And this time we're going to switch to a rolling 12 months. So this is going to give us a bigger picture. And we're going to go back all the way in history, all the way back to 2003. That's as far as this software will let us have. So this is the number of properties on the market for sale. Again, this is everything. Now look at the height. So back in July of 2010, right, we were in the middle of the recession. There was a ton of properties on the market, ton of deals out there because sellers were pretty much just desperate to get rid of stuff. So there was plenty of opportunities back then. But look at what happened since July of 2010. So over the last 9 years, look at what happened to the inventory. So every single month, it's just been going down and down and down and down. Now, at the same time as this is going down, we saw prices going up, right? So we all know it's been a great real estate market, pretty much in the entire country, but especially here in this market. Now, look at what happened once we get to around this point here. Okay, when we get towards the end of 2018, I don't know if you remember or not, but this is when the interest rates started going up. So they wanted to slow down the economy. They felt they were scared of inflation. So they started raising interest rates, starting messing around with things. And then all of a sudden we started stalling. And then it looked like inventory was going to go back up again and sales were going to slow down. And then all of a sudden they got nervous and dropped the interest rates again. But look at how it's been. So when you look at a bigger level, let me back up a little bit here. So from here it keeps dropping, dropping, dropping. Once we get to about May or June of 2018, look how it just flatlined. So we're talking, now we're in December, so almost about 18 months. So for 18 months now, look at what happened to inventory. And look how it's slowly creeping up when you look at the big picture. So this is something that's got me watching it. Like I'm not nervous about anything. I don't think we're going to see a crash or anything, but it's definitely got me paying attention to that curve, and I want to see what happens. Typically, when you see this, it's usually the sign of the beginning of a market correction. Again, I'm not saying that right now the market's still really strong, but this is definitely something to be paying attention to right now. So even though sales have been good, we are starting to see a little bit of a flattening of the inventory curve. Now, if that starts to creep back up some and inventory starts to grow, then we can see that potentially start affecting prices. It's something I'll be keeping a close eye on. I'll update you if I see anything that looks like it's pointing in that direction or in that pattern. But in the meantime, things are really good. If you're looking to sell, this is a great time. If you are looking to buy as well, this is a great time because of the interest rates. Anything at all you need, please give me a call, 843-360-2145. Thank you for your time.